Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Muhammad Adwan. Now I'm going to do the presentation for finance. So first, the introduction of 7-Eleven, establishment and evolution. So it is founded in 1927 in the United States, now a global convenience store chain. And for the operating model, it is a 24/7 operating model for unparalleled convenience. So for global presence, it is iconic and present in numerous countries, recognizable, bright and welcoming storefronts. So for the product range, it is a diverse array of products and services, extensive range of snacks, beverages, groceries, and also ready-to-eat meals. So basically, that is for the 7-Eleven. So for the mission and vision, mission is customer convenience. For customer convenience, provide unparalleled convenience to customers through a wide selection of quality products. And that's for integrity, maintain the company's uncompromising principles and also integrity. And I'm going to explain this very briefly. And also for next, for the vision, to be the globally preferred destination for convenience store, aims to offer a compelling and successful franchise opportunity. So that's it for mission and vision. So obviously, they also have competitors. So the first is Family Mart, which is originating in Japan and also a very successful brand. A successful company. And next is Tesco. Tesco has already been here for a while. For a long time. So obviously, it is a competitor for 7-Eleven. Another one is Circle K. It's also another global convenience store brand, and that is for the competitors of 7-Eleven. So for the analysis for the strength, we have diverse product range and successful franchise model. For weakness, it is too reliance on the convenience store model. For the opportunities, expansion into new markets and innovation. And for the threats, intense competition and economic downturn. So that is briefly explanation of this is for 7-Eleven. Sorry, my voice a bit low because it's a bit hurt my throat. So next for introduction of AirAsia. The founder is obviously Tony Fernandez. Headquarters Malaysia. Industry impact: democratize air travel for a broad spectrum of travelers. That's for in terms of distinctive features, a red and white fleet.
Okay, hello. Hi, my name is Muhammad Iskandar Hasibuan. So now I will present to you our calculation for 7-Eleven 2021. Firstly, liquidity ratio. So for liquidity ratio, the first calculation that we will do is current ratio. So according to our information that we get from the Sochi and Softpay, the current ratio for 7-Eleven 2021 is 0.886. This ratio indicates that for every unit of current liabilities, the company has 0.886 units of current assets. While a ratio above 1 is generally desirable, this suggests that the company might face challenges in meeting its short-term obligations. So for the second calculation, which is quick ratio, the quick ratio that we get from our calculation is 0.434. For this ratio, ratio is a bit similar to the current ratio, but it just exclude inventory from the current asset, which can lower the quick ratio lower than the current ratio. It implies that the company may face greater difficulty in meeting its short-term obligation without relying on selling inventory. So the next slide, which is asset management ratio. So first, inventory turnover. For inventory turnover, my calculation got us 10.67 times. This indicates that the company inventory is sold and replaced approximately 10.67 times during the period, reflecting efficient inventory management. So the second one is total asset turnover. Total asset turnover for the company is 1.24 times. This ratio suggests that the company generates $1.24 in sales for every dollar invested in total assets. This ratio reflects moderate efficiency in asset utilization. The third one is average collection period. So for the average collection period, we get 21 days. So what is 21 days? This indicates that the average number of days it takes for the company to collect its account receivable is 21 days. So a lower number is generally preferable, but it suggests that effective credit and collection policies is in place. So the next slide, which is profitability ratio. For the first one, which is gross profit margin, we get 27.02%. This represents the percentage of revenue retained after deducting the cost of goods sold. A high margin is generally preferred, indicating good profitability on the production of goods. So the second one is operating profit margin. So we get 3.29%. It indicates that it may have challenges in managing the operating expense efficiently. And then the last one is net profit margin. So we get 2.09%. This margin represents the percentage of revenue retained as net profit, reflecting overall profitability. This margin might suggest tight profit margins after considering all expenses. So the next slide. First, we continue the profitability ratio. Firstly, return on asset. Return on asset, we get 2.60%. This ratio measures how efficiently the company generates profit from its total assets. And then the last one is return on equity, which is 32.35%. This ratio indicates that the return generated on shareholders' equity. It reflects the company's ability to generate profits from shareholders' investment. So the next slide, the last ratio that we will count today, which is leverage ratio. So firstly, debt ratio. For debt ratio, we get 0.919. It is high, and it indicates that substantial reliance on debt to finance the company's asset. So this raises concerns about the financial risk and the company's ability to meet its debt obligation. So lastly, time interest earned, which is 3.65. It suggests that company operating profits cover its interest expense approximately 3.65 times. While positive, a higher coverage ratio would provide more comfort regarding interest payment obligations. So that's all.
Lah.
Okay, so for Asia for 7-Eleven 2022, so the current ratio is 0.965. The quick ratio is 0.552. So the next slide. The inventory turnover, we do not have enough info, which is the inventory, so we cannot make the inventory turnover. So the total asset turnover is 1.406. Average collection period is 21 days. The gross profit margin is 27.9%. The operating profit margin is 5.58%. The net profit margin is 22.1%. Return on asset, 31.1%. Return on equity, 361.32%. The debt ratio is 51.4%, and then the time interest earned is 3.95. Okay, so right now we're going to see at the ASEA liquidity ratio. The current ratio for 2022 is 0.6117, and then the 2021 is 0.58. For quick ratio, 2022, 0.6014, and then for 2021, we do not have the inventory, so we cannot make the complete calculation. And for inventory turnover 2022, we have 153.74, and then for 2021, 10.67 times. And then for total asset turnover, 2022 is 0.3368, and then 2021 is 1.24. Average collection period for 2022 is 58.24 days, and then for 2021 is 21 days. Gross profit margin, 4,050.64%. And then for 2021, we have negative 28.75. And then for operating profit margin, 39.51%. And then 2021, negative 29.72%. Net profit margin for 2022, 40.27%. And then 21 is negative 29.77%. Return on asset, 13.57%. And then 21 is negative 34.65%. Return on equity 2022 is negative 1 to 1.88%. And then for 2021 is 100%. Debt ratio is 111.63%. And then 2021 is 18.27%. And then the time interest earned, lastly, 2022, 211.26. And then for 2021, we do not have the interest, so we cannot make the complete calculation. Thank you.
Okay, so my name is Muhammad Haziq. So for my part is the analysis. And as you can see, this is the cross-section analysis between 7-Eleven and AirAsia. So if you can see from the overall, let's see from the current ratio first, the 7-Eleven has a higher, way more higher than AirAsia's punya current ratio, 0.866, and AirAsia is very low to 0.17. So this is due to the COVID. So it is important for companies to take care of their company when there is critical or crucial times, such as the COVID MCO period. And then the quick ratio, there's not enough information for AirAsia, and same with inventory turnover. And then there's a total asset turnover, there's more to 7E. And if you see the average collection ratio period, 7E has more, 1.24 times compared to AirAsia. And if you go through all the rest, it is completely shown that 7E thrives more for investors to invest in this company, because all those percentage, you can see that AirAsia has negative, meaning they have depreciation in their market, while 7E thrives and able to make profit and revenue to have a return on investment. So if we go, to the next one, 2022 is quite similar, but as you can see, AirAsia is starting to thrive and has a better quick ratio than 7E. So this is a good thing for AirAsia, that they are able to manipulate and able to change their negativity on 2021 and recover their profit which was negative and able to gain more than 7E during 2022. As you can see, all those percentages are positive and way more than 7E, except for return on equity, which is negative. However, they are thriving and slowly. And as per 2023, I have done a bit of a research, and AirAsia is currently making positive, what do you call that? Sorry, revenue. So this shows that AirAsia is still relatable and valid in the market. Same with 7E. However, 7E is a convenience store, so the percentage cannot go higher, while AirAsia has a higher price and premium quality. So it shows that it's up to the investors where they want to take risk or take a low risk and have a stable income. And as of a time series analysis, same as 2021 or 2022, the AirAsia and 7E, here is 7E. So during time, 2022 is better for 7E, while in AirAsia, same as well, 2022 is better than 2021 because of COVID. All right, so here's conclusion. I will pass this part to Alvin. Please introduce yourself and unmute your mic. Alvin, are you able to unmute your mic? All right, thank you.
Hello, my name is Alvin. So the conclusion part, we can see the AirAsia liquidity ratios, which is the significant surge in both current and quick ratios, and also enhance ability to handle short-term financial obligations. And also 7-Eleven's liquidity ratio improvement, which is positive trajectory with an improved current ratio. And also it indicates strengthened liquidity position. And for the last one, holistic investment consideration, which is it emphasizes the need to go beyond a single metric or trend, and also requires exploration of various financial dimensions, and it aims for a comprehensive view for overall health and resilience. So while the last part, which is recommendation, so for the recommendation, we have 5 points here. So which is the first one is individual investment considerations, which is it depends on personal investment goals and risk tolerance. So it diversification recommended for risk spread across the sectors. While the conclusion on AirAsia and 7-Eleven, we can see that it positively liquidity trends for both companies, which is optimal decision requires understanding broader financial narrative, industry context, and also strategic outlook. And the third point is financial advisor consultation, which is strongly advised to navigate market dynamics and also tailor investment strategy to specific objectives. And for the fourth one is investment decision process, which is alignment with unique financial objective and also real decisions required through research and also understanding of personal financial situation and goals. And the last one is hypothetical consideration for AirAsia, which is it operates in airline industry and also factors influencing success includes fuel prices, air travel demand, and also economic condition. So it interests in potential industry recovery post-pandemic. So this is from us. Thank you very much, Miss. Thank you.
Thank you so much, madam.
Thank you, madam.
All right.